Hello students, welcome to KK Commerce Tutorials. In this video, we have discussed about classification of accounts. Classification of accounts. In these previous classes, we have discussed about in the introduction classes, the accounting system is divided two types. The accounting systems. Accounting system divided has that is two types, that is single entry accounting system, and second one double entry accounting system. In this today class we have discussed in the double entry accounting system. The double entry accounting system, according to double entry accounting system, the accounts has divided like classification. It is two types. According to double entry accounting system, the accounts has classified two types, that is personal account and impersonal account. Personal account. In the accounting transactions, we have discussed or mentioned in the person. The personal account has dealt with only person. In the accounting transaction, you have appeared or mentioned in the account person, you have follow this rule. You have discussed in the briefly one by one. First one, personal account. Personal account. The personal account has divided again three types, that is natural person, and second one artificial person, and third one representative person. The personal account has a person in the, according to double entry accounting system, the accounts has divided two types, that is personal account and impersonal account. In the personal account, the person has divided three types, that is natural person, artificial person, representative person. What is the natural person? The natural person is like we, Ram, Sita, created by God. Example, Ram, Sita, Krishna, etc. The human being names. And artificial person. The artificial person is created by a human being. The artificial person is created by human being. Like a person has created that person, like organizations names. It is example SBI, State Bank of India. This organization has created a human being, like Tata Industries. This is also organization. So these company have created by a human being. One person has created that organization. College names, school names, any business organization has treated as a artificial person, etc. LIC. Then third one, representative person. Representative have the person will have worked in the other person. The person have worked behalf of the another person. So that person called representative person. For example, outstanding rent, outstanding rent, outstanding salaries, capital, drawings, outstanding salaries, outstanding commission, some outstanding or capital or drawings or these type of expenses or incomes are treated as a representative person. Okay. Then next rule, the personal account rule. This is a golden rules or double entry accounting principles rules or double entry accounting system rules. Whatever any you have says, the rule, it is the rule. The rule is personal account debit the receiver, debit the receiver and credit the giver, credit the giver. The person who's the receiver is treated as debit, who's the giver he is treated as credit. Okay. The person who's get the benefit is called receiver, it is treated as debit. Who's the person give the benefit, that card it is treated as creditor. That is the rule. Rule is the personal account. Next, second one, impersonal account. Impersonal account. Impersonal account means non-personal. The impersonal account is also divided two types, that is real account and second one nominal account. Nominal account. Then first one is real account. The real account is dealt with assets. Assets, whatever any asset like tangible or intangible. Then assets have divided again two types. Assets means cash or cash equivalent, or tangible or intangible, whatever any assets have dealt with the real account. The assets have divided two types, that is first one is tangible, tangible, and second one is intangible, intangible. Tangible assets, the tangible assets means we can touch, we can see, and you can utilize that property. Once again, tangible asset is we can touch, we can see, and utilize the property. That asset is called tangible asset. For example, building, buildings, furniture, furniture, land and machinery. These type of assets the building has are furniture and land. The furniture will be touch, and furniture will be physically appear and utilize that asset. So that type of asset is tangible asset and intangible asset. Which assets have we can't see, we can't touch, just we have utilized that asset, like example, goodwill. Goodwill goodwill they have not physically appear. That is the reputation of the person or reputation of the organization. So physically have not appear, but goodwill have utilized the our name, that name. So goodwill, patent rights, registrations, etc. Patent rights, publishing rights, these type of have intangible assets. Then the real, that is the assets. The real account is dealt with assets, these type of assets. So the real account rule is debit what comes in and credit what goes out. The rule is debit what comes in, which means which asset have comes in the organization, that asset will be treated as debit. Which asset has gone out from organization, that is treated as credit. So the real account rule is debit what comes in, credit what goes out. So that is the real account rule. Next one is nominal account. Nominal account. The nominal account is dealt with expenses, incomes, losses and profits. The nominal account is dealt with expenses, incomes, losses and profits. The nominal account is rule. It is debit all expenses and losses. Debit all expenses and losses. Credit all incomes and gains. Gains means profits. Rule is debit all expenses and losses. We have in the business, we have occurred expenses. Sometimes we have getting the losses. That type of transaction will be treated as debited. In the business, we have received some money from other parties or some getting the profits. So that type of transaction will be treated as credit. That is the classification of accounts. The basic rule of the double entry accounting system, and it is the three rules. The accounting system will be depended upon these three rules. So these three rules treated as a golden rules in the accounting system. Okay, I hope you understand. Thank you.